All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, November 9th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, markets taking a little bit of a dump ahead of the much-awaited CPI number tomorrow. So S&P down 2, Triple Q's down 2.3, and the Dow down 1.92% on the day. Investors may be a little nervous given what happened yesterday. We talked about liquidity issues yesterday. Markets selling off on very light volume, going back up on very light volume. Federal Reserve issued a warning a week or two ago about illiquidity in the Treasury market, which obviously spills over to all markets. And of course, yesterday we have the FTX blow up. That's something that's indicative of that. And, again, I speculated yesterday, they floated this up on very, very, very light volume in the morning, and then somebody used that to essentially de-risk something. I mean, because this did not happen at the same time that the news came out in the morning. So it was clearly a deliberate decision here. So, maybe you're looking at other investors today and they're thinking like, well, maybe we should de-risk and pare back some of that ahead of the CPI in case we get a hot number. As far as the technicals are concerned, if we just flip over to the ES here. Again, we hammered on this trend line yesterday. We backed off of that, and again today. And now I'm kind of watching this little potential head and shoulder here on the 4-hour. So you can see that there, nice head and shoulders. If that triggers tomorrow, that could take you down right back down to that 350 handle. So basically to your double bottom area, and obviously that would start the next leg down in the bear. You can also see the same thing here on HYG, which is a bit of a concern. That actually kind of looks like that did trigger today. You could debate where that trend line should be drawn. You could draw it from here to there. I mean, either way, it closed right on it or just below it. So definitely not a pattern of strength. If we look at the NQ, not a pattern of strength either. I mean, this is very, very weak here. Just chopping in this range. That is bearish consolidation there on the NQ. Little inside bar pattern played out, starting to play out to the downside. And obviously we can see the same thing there on the ES. Move down, little bear flag, bear pennant, and now it's starting to downtick. The one thing that I will say, so again, technical positioning is weak, and you guys know I think we're still going lower. I have lower price targets here, but the case for the bulls, at least for the meantime, is outside of seasonality, which everybody knows about by now. But something that I noticed specifically today is the 2-year was green, and it's not just that it was green. If you look on an hourly, it had a nice kind of bullish inside bar, then another one, and it upticked here really into the close. And you can see there, really in the last hour or two, it started to bid up. TLT, on the other hand, 30-year, this was actually a lot weaker pretty much all day long. It did close green, but take a look at the last hour. This just really makes me a little bit more neutral here, because it's almost like they snuck this out the back door. Like, okay, look at the SPY, guys, look at the SPY selling, and then they're bidding up the 2-year and the 30-year, like behind the, sneaking it in the back door essentially. Could be something, could be nothing. But I will say this as well, and this is something, these are the things you have to pay attention to if you want to be the best. XLE got hammered today, down almost 5% on the day. And, that has had positive correlation with the 10-year Treasury yield for quite a while. And when we had that poor auction in the middle of the day, the 10-year spiked, and XLE, and both, XLF to a lesser extent, is positively correlated there. Neither of those got a bid. And again, what I've been telling you guys, I said, OXY, watch out for their earnings. I mean, they priced in a grand slam, and guess what? They hit a home run. Their earnings were amazing, but priced in. Okay, so that's why you don't chase these things up here. I tell you guys not to do that all the time. XOP, you see there coming in. OIH, way extended here, down 5% on the day. This has got a pit stop down here, but this should get back to 260. In the XLE here, and probably down to that 8250 area. But anyways, my point is, okay, what are we looking at tomorrow? Inflation data. 2-year rising, XLE falling, XLF falling, crude falling. So is it nothing? It's only one day, but it's almost like somebody's trying to tell us that we're expecting a slowdown. So that's something to keep on your radar. Now for the bulls, they have to get rotation, right? So if we're seeing money outflow in XLE and it's just outflow, then the market's going to fall. But if we see outflow and it rotates into the Qs, then you get to move up. And you could make a case that the technicals here on Amazon, Tesla, Meta did get a bounce here. Apple's been pretty weak lately, though. Microsoft has already gotten a bounce, but some of these technicals here, like some of these FANG stocks, are really oversold. So maybe they need to be reset here in the short term before we can, push lower. So again, and then, conversely, if we look at the Dow, this is overextended in these trend lines. You see that pullback there. So again, the Dow has been more positively correlated with yields. So what we would logically expect if the bull case plays out is a rotation out of the Dow and to the Russell for a lesser extent. The Russell's outperformed lately, and that money going into the Qs. So that's your bull case. Either way, even if that does happen, I don't see us getting through 400. So I'll just put that out there. I mean, yeah, maybe we could somehow get up into this area if we really just run into the end of the year. But yeah, that's what I'm looking at. Either way, I still have a bear bias here. If we take a look at the VIX, obviously I've been telling you guys that lately. This is it's in completely different technical positioning than it was last month for CPI. So, and you can even make a case it's starting to peak above that falling wedge top trend line there, and it is very close to support. That trend line support there. So again, it's generally favoring the bears here. And again, like even just to look at the 2-year, this isn't anything to write home about. It's not like we blew through the 20 moving average or something. And the same thing with the TLT daily. It's not like we did anything of note. We're still below all the moving averages, and we could easily make a lower low tomorrow. But there's just little things that you got to pick up on, and they kind of give you clues as to maybe what the market wants to do next. But anyways, let's flip over to the semis. Again, so semis backing off, down almost 3% on the day. Possible little evening star reversal there, so kind of move up, gap up, and then a doji into resistance, and then a nice sell-off today. That closed right on the 50 moving average. So again, this is going to need to rotate as well, but this has outperformed lately, so that's kind of your silver lining there. But this is going to need to rotate and really lift tech up as well if this is going to happen. But semis backing off today, as you'd expect, going into that gap yesterday. IGV, I don't really see anything strong here. It's not oversold, and it's very weak. So IGV I do not like right now. That is definitely a sector under pressure. If the bulls do get momentum, of course it'll go up with everything else, but it's just going to be piggybacking off of the rest of the market. Dow transports again, so that 14,000 level ended up holding, at least for now. So 13.9, we've got all the way almost up to that 14,000 handle, and a nice little dip today. So transport's down about 2.5%, right back below that 100 moving average. So we'll see what that does tomorrow, but that did back off of that level, at least for now. We talked a little bit about rates, but there's the 10-year there. So that was green on the day. That actually held up pretty well. 30-year still was green by the bond market close. The TLT did bid up after bonds closed. I did a lot of that bidding after bonds closed. So take that for what it's worth. But yields were higher. And again, they're overbought, but I don't see them extended really from the moving averages right now. So they're still holding up, and can't really say anything wrong about it right now. Anyways, home builders, again, still stuck in this range. Looks like everything else, down move, inside bar, starting to fade. ITB was green for a little while today, so that did outperform a little bit. Ended up finishing red there on the session nonetheless. And then VNQ also backing off, down about 1% on the day. We mentioned XLF a little bit. We kind of came up into like a little short-term double top there. Again, still a lot of resistance up here, but you're chopping around. I think that financials are about done right here, at least for now. We talked about Goldman, JPM. These things are just overbought with no support. So if they start to come in, they can come down just as fast as they went up. Broker dealers, same kind of thing. Nice sell-off today. It did stall out right at that support level, that previous pivot right there. So we'll see if that comes into that 20 moving average here tomorrow, if it continues down. But again, possibly a little bit of a shift here in the markets. We're not seeing the financials and energy stocks perform as nicely as they were when yields are up. So definitely have to make note of that. We talked about crude already a little bit. So that did continue to back off of that inverse head and shoulders neckline that triggered the other day, Friday actually. And it can still be saved on a weekly basis. You know, they can close it above here by Friday. It would take a lot of work right now, but it can definitely happen. You still have an inside bar though. So here's your green bar, and you're still inside of that. So for what it's worth, I'm a little bit more neutral on crude right now. You know, there was a pretty good sell bar today, so we'll see what it does tomorrow. Obviously, CPI is going to move a lot of things. And you can make a case that, you know, oil from the last CPI print has had a nice bid. Gas prices, not so much. I mean, it is higher, but not crazily higher. But, you know, just something to keep into consideration going into tomorrow. XLE, again, we talked about that. You know, might have a short-term pivot here at the 20 moving average, but I think this does end up heading lower. XOP, nice sell bar today as well. You know, probably wants to stall out around that 140 area, but I could see it getting down to 130, maybe even 125 over the next couple of weeks. But again, energy coming in. OIH here just super extended. You know, 60% gain in like 5 weeks is not normal for an ETF that has a bunch of like Schlumberger is its largest holding. So definitely way overextended here. Nat gas, I wouldn't do anything with this right now. This is way too all over the map. So, you know, 1 week you're at 675, and a week later you're at 475. Then 2 weeks later you're at 720, and 3 days later you're at 593. That's way too much. This needs to firm up. It needs to tighten the pattern up. This is too all over the map for me to do anything with now. If I see something I like, I will jump on it, though. I do like to trade natty when I can. Dollar index. So that 109.40 level is held so far. We didn't quite get down to this trend line here. I would have felt a lot better as a bear if we got to this trend line today and the market was up. Then I wouldn't even said anything about bonds that I said earlier. But nonetheless, you know, it is up here. Watch this trend line. Watch 109.40 tomorrow. If you break that, then this market can go higher. So just be aware of that. The dollar index is really driving everything right now. Gold here, again, backing off of that 100 moving average with obviously the dollar upticking there. You know, nothing really out of the ordinary here. You touched the 100 moving average, you backed off after a big surge. So that's not really a surprise here. Silver, same thing, except with the 200 moving average, but this has higher highs. So it is in a lot better shape. And then platinum here, finally, what did I tell you for what, weeks? Probably a month now, 1025. We got up to 1024.70 and a pretty good reversal there off of that level. And there's that channel there that we're backing off of. So platinum may need to do some backing and filling here, but overall I still like it. And I think this has started to make its move already. Copper, you know, nothing terrible here. It's starting to put in an inside bar. So we'll see if that develops a little bit more. The longer it consolidates, the more juice it can have. But again, this will probably be affected with the rest of the market tomorrow with CPI. All right, and then lastly, let's get over to the coin. So kind of just charting the aftermath here of yesterday and you know, crypto getting hit pretty hard. So Bitcoin is through the year-to-date lows and actually really the 2017 lows. So trading right now at 16,150. So it's safe to say it's not going back to 22.5 anytime soon. And again, it looks like this weekly, unless, I mean, I don't know, maybe they come up with something. They pull something out. Like I said, there is some weirdness going on with bonds right now. Who knows? But I think investors, if I was heavily invested in crypto, I'd be nervous right now. I mean, because you got to think about it. Maybe you really like your trading desk or your whatever you have. But FTX was basically like Lehman Brothers. It's like Binance and FTX. I was like Lehman Brothers, Bear Stearns, like JP Morgan. If that's the biggest, like, you know, we're talking about like the biggest crypto desks out there. If that can happen to them, then, you know what I mean? Like, do you want to risk it? You don't know what's going on under the hood here. But so that's really the concern here. If it continues down, you'll have support at 12,000 right now. But that is a weekly bear flag. I've been talking about that for a while now. It is starting to play out. Same thing there on the monthly. So nothing good in the crypto charts. You know, if they save, you know, I can't rule out a total sandbag move. You know, like I said, maybe they trap people big time. It would be an epic all-time type trap, though. You see Ether there actually holding up decently off the lows. Dogecoin. Look at that. Look at this pump and dump there. Polkadot there at lows as well. But yeah, nothing really good with the chart. Failed consolidation leads to a strong move to the downside. So we'll continue to watch that. And again, that could be, I mean, that's probably one of the biggest bear cases that you have is the liquidity problems right now. Who wants to be long anything if this stuff starts spilling over into the equity markets, especially when the Fed isn't pumping massive amounts of liquidity into the system. Anyways, guys, we'll check out the CPI number tomorrow. Be sure to stay tuned for that. Come find me on carnivoretrades.com, and I'll talk to you guys all tomorrow.